After skyrocketing in mid-2020 and peaking in October, the Amazon of the East (BABA) is constantly entering price cuts. Is it due to the shaken will of investors or something else? This video presents the depreciation of BABA stock, negative impact from the US government. Alibaba Group Holding Limited, ticker BABA, also known as Alibaba Group and as Alibaba.com, is a Chinese multinational technology company specializing in electronic commerce, retail, internet, and technology. The company, led by Jack Ma, a Chinese billionaire, completed its initial public offering in 1999. So far, it was rated as the fifth largest artificial intelligence company. It is also one of the biggest venture capital firms and one of the biggest investment corporations in the world. 2020, a turbulent year for this Chinese company, started with one of the sharp decline events in the Chinese stock exchange history. The main reason was that COVID, the world-class pandemic, worries investors about its consequences in the Chinese economy, and the sell-off decisions are inevitable. However, Alibaba Group stunned the world with its staggering recovery after just a few months and set its new all-time high at $317.14 per unit on October 27, 2020. All good things must come to an end. The price of the leading Oriental stock began to decline. Specifically, it was recently down 5.36% and closed at $227.6 in the first week of New Year 2021. The downtrend will even continue if there is no new impact. What was the cause behind this unbelievable volatility? According to an announcement on CNN, US officials are considering prohibiting Americans from investing in Alibaba Group Holding Limited and Tencent Holdings Limited, a potential escalation of the outgoing Trump administration's efforts to unwind US investors' holdings in major Chinese companies. President Trump signed an executive order prohibiting Americans from investing in a group of Chinese companies the US says supply and otherwise support China's military, intelligence and security services. The order blocks American companies and individuals from owning shares directly or through funds that include any of 31 companies identified by the US as aiding the modernization of the People's Liberation Army or People's Liberation Army and China's intelligence and security services. This blacklist will likely be expanded further. China's two most valuable publicly listed companies, Tencent and Alibaba, are on the radar of the current US government. If the bans are implemented, then it'd be a huge thing for the market, said the executive director, Stephen Leung at UOB Kay Hian. Currently, the market only relies on the newly elected President Joe Biden. Will he cool down tension on both sides of the Pacific?